Euro dollar day trading tips for active day traders. Euro dollar day trading tips for active day traders. All right. Good morning, good afternoon, good evening, bonjour, bonsoir, mes amis. Guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. And our website is www.dayprotraders.com. All right. The title of the video is Euro Dollar Day Trading Tips for Active Day Traders. Okay, in order to avoid day trading mistakes, okay, we should not violate the market pattern on any time frame. We must also first identify, okay, a valid trading setup, okay, and then apply a top-down trading method. All right. If you want to know more about what is a multiple time frame trading method, check the video that we call "What is a multiple time frame trading method" by 24 Stock Trader. Look for 24 Stock Trader YouTube channel and look for the video that we call "What is a multiple time frame trading method." Okay. So on a monthly chart of the euro dollar, we can see that the price is consolidating between the level of 11352 and the level of 10852. So you need to note those levels down, the red horizontal line here. I have too many lines on my chart. Okay, so the red horizontal line here is 11352. That's the top of the consolidation. And the lower part of the consolidation is 10852. So on a monthly chart, the euro is consolidating, okay, between the level of 11352 and the level of 10852. Okay, so what is the strategy? In normal condition, if the price is consolidating, traders will look for opportunity to sell, they will give priority to sell signal on or near the upper side of the consolidation. All right. So we will say that as long as the euro fails to go above the level of 11352, okay, we want to look for bearish pattern in that resistance zone. Bearish pattern will appear on or near a resistance level. Bullish pattern will appear on or near a support level. But that's not the end of it. So the market pattern is a consolidation. So if we are buying somewhere near the level of 11352, which we can, we should be a little bit careful. So in fact, we will become bullish if the price breaks above the level of 11352. So breaks above and find a support. Okay, personally, I believe that the euro should continue to go up. It will struggle a bit because of the resistance that we have ahead here. But slowly but gradually, you break above the level of 11352. It will. This slowly but gradually it will. But it will take some time, okay? Because of the resistance that we have here. But we can only give priority to bullish signal after the price breaks above the level of 11352 and retest it to validate the level of 11352 as a valid support level. Okay? So this is what we see on the monthly chart. Market pattern is a balanced market pattern. A consolidation is taking place on the monthly chart. We have to adjust our day trading strategy, okay, with the current market pattern. Okay? If you go now to the daily charts, even the weekly chart first, you can see that the same market pattern is in place. You can see that the price is oscillating between the red horizontal line here and the orange line. Okay, it's oscillating, and we are, as you can see, the price is now at 11301. Our resistance is at 11352. So we are in a resistant zone. But slowly but gradually, in my view, the euro will go above the level of 11352. That remains to be seen. It must go above it and find a support before we can give priority to bullish signal. So remember, the current resistance level that we cannot afford to forget is 11352. The price is now at 11301. Okay? All right, because of the market pattern. So we are expecting a breakout above 11352, but we must be patient until the breakout has taken place and the validation of that resistance as a support level. Okay? If you go to the daily chart, what do we need to pay attention to? On the daily chart, we see that the price, though it is in a horizontal channel on a monthly chart, we see that there is a bit of, look carefully, I don't want to remove my line. You can see that there is a bit of higher lows that are appearing now. Can you see now? On the daily chart. So we have a low here. Okay, then we have another higher low here. A little bit higher low here. But since we have this higher low here, we haven't seen a new higher high. Because after the price display a higher low, we want to see that the bullish momentum is still strong. If the bullish momentum is strong, after a higher low, resistance must be broken on our left-hand side. You see here, we have a new higher high. But since now we have this new higher low, we haven't seen yet a new higher high. This is due to the resistance that we have here at 11352. It's crucial that we go above it. If we go above 11352, the price find a support above it. You see there are other resistance here. Find a support above it. Be aware there are other resistance here at 11388. So in the zone of 11352, there are resistance here. So break above, retest, turn around. Careful, careful, gently, gently. And we will see whether this new higher high, this new higher low will produce, okay, so to speak, will produce, okay, a new higher high. So higher lows, higher lows, higher high, higher low, waiting for the new higher high somewhere above this zone here on a daily chart. We are seeing here, you see, a higher low and a bullish trend line here. I'll call out my bullish trend line now, which color turquoise, okay? That's my new bullish trend line here. Okay, if we draw another line that is parallel to this turquoise trend line here, I'll choose this point here, and I will just draw a line that is parallel to it. So we have a small channel here. In fact, I'll change it into red channel, so you can see on my chart here. Okay, so the key point for a day trader is to align the strategy with the market pattern. We have seen on the monthly chart is a balanced market pattern, a consolidation, and we are very close to the top of the consolidation in the zone of 11352. If you want to be bullish, the price must break above the level of 11352, break above, retest, turn around. Okay, so we are seeing the higher lows being formed on the daily chart. We have the red channel here. All right, so as the price start going up from here, we need to be aware of these resistance along the edge of the upper side of our red channel. So if he breaks above, okay, the level of 11252 and start going up, be aware of the upper side of our red channel here. So if the market opens, how do we play this? Okay, very simple strategy that we can apply. So this is Friday. You see Friday, the 18th of September 2015. We will highlight what? The high of the Friday. We will highlight also what? The low of that Friday. Okay? And the median line of that candle is somewhere close to the level of 11352, which is a resistance level. That's the median line. So again, using this strategy, the high, the low, and the median line of last Friday, we can see that the price, if it's going to be bullish, it must come above the level of 11352. If you apply the same strategy on the weekly chart, highlighting, you see this candle here, the weekly chart candle. If we highlight the high of that candle, I'm just doing it roughly here, and the low, the median line, okay, is almost equal to the level of 11352. So once again, priority to bullish signal after the price breaks above the level of 11352, break above, retest, and turn around. This is the level that we need to watch next week if we want to day trade and if we are bullish. The opposite is also true if it's stuck below the level of 11352 and we switch time frame. For instance, we go, you see the red line here, okay? if I'm remove my pink line, okay, and some of the line here, because I want you to see clearly on the chart when I change my time frame. All right. If you pay attention, to this red horizontal line, okay, we're on a weekly chart now. If we go, for instance, I'll go to the 30-minute chart, okay. If it's going to be bearish, my friend, if it's going to be bearish, this is the red horizontal line I'm talking about. See that it formed a double top above that level last week, okay, and quickly return back below it. So we don't want to see, okay, if like see now we have a double top on a 30-minute chart, but if it start going up, okay, start going up, and instead we see something like this, a double top followed by a lower high here, okay, and the common central line along this rally up to this point is kaput. Then we must give priority to bear signal, a double top followed by a lower high. Common central line is kaput. We use a top down trading method, okay, to sell it instead. Okay, but if you want to be bullish, in myself, I will not attempt to sell the euro at this stage. I will be patient and see whether it's going to go back above the 11352, round away and pull back and retest it, or preferably go above the 112 and form a kind of a bullish chart pattern, and then we use a top-down or trading method. All right, this is a euro-dollar day trading tips for active day traders. Things that traders need to pay attention to in order to navigate through the Forex market. Remember that the economy news can change the dynamics of a technical trading. One must go to www.forex factory, check the economy news that I do next week, the high impact economy news, what time they are due, and how they can affect the market. All right, this is very, very important. Do not use the technical alone. Pay attention to the economy news, the market environment. Is it the right time to enter the trade? Is it the right market environment for bullish traders? And then steadily we combine everything all together to make, okay, an intelligent decisions. If you like this video, please give us the thumbs up. If you dislike it, please give us the thumbs down. If you love it, feel free to share it on Google+, on Twitter, and also on Facebook. If you love our video, feel free to subscribe to our channel. Until the next time, enjoy yourself and be very happy. We are the TSTW24 traders talking about the euro-dollar day trading tips for active day traders. Happy trading to you all, and speak to you very soon.